Good afternoon. Ivan Barratt here with another video to my investors and prospective investors. It is Monday, March 16th. Things are moving pretty quickly. Change is happening. It seems like in real time for a lot of things. I wanted to get this video out. Several of you, less than 10, but maybe more than 5, had questions last week after the video I sent out about occupancies, collections, what we're seeing out there on the front lines, and what we think might be happening from a portfolio perspective. So first and foremost, safety of our employees, safety of our residents is paramount. So we're taking all the necessary steps, guided by the CDC and World Health Organization, to limit social interactions, close down common areas, limit groups gathering, that sort of thing, while still operating. After all, in apartments, we do manage folks' homes. So it's imperative that we stay open and continue to conduct business, but in a safe and thoughtful manner. And it's interesting, so some of the stuff I'm getting from the front lines post our leadership meeting this morning was even a little surprising to me. This weekend we had more applications come in for places to rent than we've had in probably 9 months. So we had a record weekend. In fact, we've also had a number of our residents canceling, or at least requesting to cancel their move-outs and requesting instead to renew and stay put, which is causing some unintended consequences of its own. We're having units that are now basically double booked, where we thought somebody was moving out, somebody else has signed a lease to come into that unit, so we're having to deal with that. Collections, occupancy, we have to look at that day to day. It's happening all in real time, and we're monitoring it very closely. Right now, our portfolio stands pretty highly occupied, on average about 95%. One property where we're just in the midst of doing some value add and turning units is dragging down the occupancy of the rest. So if you took that out, our portfolio would actually be around 97% occupied, which in most cases we'd be raising rents. But of course, right now we're doing whatever we can to assist our employees, and who most of which live on site, and our residents. Just going through some more stuff here with collections. Unprecedented amount of government assistance right now. We're seeing the federal government, state governments, and also central banks here and around the world deliver unprecedented stimulus, breaks on paying taxes. This sort of thing is helping to keep the economy going. Certainly suffering some blows right now in restaurant, bar space. A bright green shoot of hope, so to speak, is manufacturing. I am in networks with lots of manufacturing entrepreneurs. My brother is a manufacturer in the UK. He's dealing with unprecedented demand for work right now. And some of the manufacturing entrepreneurs here in the Midwest that I talk with frequently through my organization, Entrepreneurs Organization, and Young Presidents Organization, of vast networks of entrepreneurs, that they're experiencing unprecedented demand for onshoring, for fixing the supply chain here locally. And we see this as a trend that will continue as the world separates a little bit, and more onshoring occurs of these manufacturing processes within the supply chain. So that's very interesting to see. Beyond that, multifamily has been a great place to invest because people still need a roof over their head. And even beyond that, all our apartments are carrying big cash reserves. So if we do see an uptick in a delinquency, in collections, there's more than enough cash to support that. And so we're seeing this as an opportunistic time from a pure investment standpoint, to seek out even more opportunities. The Fed Sunday evening cut interest rates to 0. This makes the debt that we go after on these deals even cheaper. So if we can take advantage of that with some opportunities, we're more excited to acquire assets. This year could be more acquisitions than we've seen in the last 2 years combined, thanks to the increased deal flow that we're seeing in our pipeline from a little bit of disorder out there. And it's happening right now. Our thesis we developed, the reason why I got into multifamily in the first place, was to be in a business that would benefit in recessions, that would grow stronger in recessions, and be less susceptible than virtually any other asset class in real estate. And if you bifurcate that down further, it's why we stay out of very low income housing, and it's why we stay out of luxury. I might be feeling differently if I was renting luxury apartments right now. I think we might see some softness there as folks move out to a more budget-friendly sort of arrangement, similar to what we offer in our marketplace. Thank you to all the investors out there for responding to my videos. I really appreciate all the kind words you've given as well. And as I said last time, if there's more questions about what we're doing, how we're doing it, or how we're viewing what's going on right now, please don't hesitate to email me or the team, and we'll either respond via email or via another video. Happy Monday. Stay safe.